I welcome you all to FM Tuition Academy with teacher Hebebe. Briefly, we are going to be looking at what we are calling a cash book. Many people have got this question: what is a cash book? How many types of cash books are there in bookkeeping? Yes, Jen, you might be confused and asking yourself, what is this cash book that the sir is talking about? The cash book is simple. A cash book is a book in which we enter major cash transactions. The source document for this cash book include the receipts, cash sales slip, and a check counter file. That is why you are not allowed to throw away receipts, or your boss, when sends you out to buy something, they'll ask you to always bring a receipt. A cash book can also be said to be a book of prime entry in which we first record transaction prior to storing the information in the ledger accounts. Okay, that is clear. You should realize that in an organization there are a number of cash transactions that take place. In order to maintain control over cash, a separate book called a cash book is kept to record these transactions. So in every organization, there is this cash book. For what reason? To help control over cash, or maintain. Because if there is no cash book, money will just be moving out carelessly and there will be no track of it. Now, another question one was asking is the types of cash books. There are three main cash books that we have. The first one is what we call the one or single column cash book. The second one is the 2-column cash book. And the third one is the 3-column cash book. Please don't get confused with the cash books. I have mentioned the three of them so that you know as we are going ahead with these books of prime entry. So I have mentioned the cash book so that we have an idea of how many cash books we have to look at in this course. So we are going to start by looking at the 1-column cash book. Now, what is this 1-column cash book? Yes, Jane is saying a 1-column cash book is a book this is a cash book with a cash account only. Very correct. Very, very correct, Jane. Kandu is also saying the cash account records details of receipts in cash and payments made out in cash. Very correct. That is with the 1-column cash book. The 1-column cash book will only consist of a cash account column only. So, which qualifies it to be a 1-column cash book. And you have to take note that records or the details are from the receipt in cash payments made out or made in. Are we together, class? Thank you very much for taking of those. Now, the key things I want to bring out to you is how to prepare a cash book. How to prepare a cash book. You might be wondering, sir, how do we prepare the cash book? One, I want to make this clear to you that you should always remember that a cash book is part of the double entry system because of being made up of accounts. Therefore, when preparing the cash book, we follow the normal rules of double entry. That is, 1, we debit the cash book when cash is received. Is that clear? You debit the cash book when cash is received. From who? A customer. When checks or cash has been paid into the account. When checks or cash has been paid into the bank account. Now, you might not receive the check. You might not receive some cash. Maybe a customer is in Chilawombwe and you're in Kawe, and the customer just tells you to say, Mr. Hebebe, I have sent money into your account, meaning you are going to debit that transaction. Secondly, when preparing the cash book, we credit the cash book when, take note, we credit. We've talked of debit and we are now talking of credit. So when do you credit the cash book? You only credit the cash book when cash is paid out. Are we together? Now you might be wondering, sir, you are the one running the business. I'm the one running the business, but how do I credit my cash book when cash is paid out? One, you are looking at your expenses. When you pay out money for buying, for purchasing your goods, you are giving out cash. So you credit that transaction. When you give out money to Mary, to say, Mary, I'm buying bananas from you, you are crediting your account. Then, when checks have been paid out, you might be renting a shop for that particular business you are doing, and you are paying your landlord is Mr. Jerry. And now you have to give Mr. Jerry, you give him a check because you don't have cash in hand. So when you give Mr. Jerry a check, your account is going to be, when you give out that check, Mr. Jerry is receiving money. You are paying out, your account is losing. Are we together on that one? Now, what are some of the requirements for preparing a cash book? Requirements to preparing a cash book. To prepare your cash book, one would obtain the information from the following source documents. We are calling them source documents because that is where the information is coming from. A cash sales slip, one. Cash dockets, till row, receipts, a check counter fills or check stubs, deposit slips, and cash invoices. So when preparing your cash book, you have to make sure you have got these things in place. You may not have all of them, but you may have some. That is where you obtain some of your information. Many of you have gone into ShopRite. You come out with a slip which they give you. That is a receipt. So that receipt that you have, you take it to your company and you use it for documentation's sake, so that you can put that information in your cash book. Is that clear? Okay, thank you very much. Now that we have known the requirements, we are going to get in detail. I have a question here for you so that we have working examples. Enter the following information into E. Hamkololo's cash account for the month of January 2014 and balance of the account. We've been given an account that we need to balance off. We've been given the details here. Now, we are told that on the 1st of January, you can look at the table here, that on the 1st of January, Hamakololo started business with how much? 900 cash in hand. 900 cash in hand. Then on the 3rd, what did this person do? This person on the 3rd of January bought goods for cash. With how much? 2,000 kwacha. On the 8th, what did they do? They paid rent by cash. How much? 1,500. On the 10th again, another transaction was made of how much? Of 3,000 cash. What were they doing? They sold goods, meaning they were receiving money. They give out goods and receive money. And then on the 17th, paid sundry expenses by cash 550. So you're paying out expenses that the business has incurred during that trading period in the month of January. Then January 25th, we are told we purchased goods. We have cash purchases. You went to order more stuff because your stock was finishing. On the 31st, what did the business person do? They bought a motor vehicle by cash. How much was the motor vehicle? 2,000. Now, the motor vehicle could have been for the purpose of using for buying goods, because you go and buy goods, you get on a taxi, your expenses become even more. But now you buy your own car. They've bought Hamakololo's has bought a vehicle for the purpose of the business. Now you have seen the way the transaction have been put. The date is listed. We've got how much and what was being done with the money. Now, forward. I want us to look at the solution. How do you sort it? The one column cash book has got this column. The first, you have the dates, you have details, F is for folio, and DR stands for debit side, CR stands for credit side. So we begin to record here, 1st January date. First transaction that was done was that we had capital of how much? 9,000. 9,000. Now, what do you do with that 9,000? 9,000 is your capital. You are going to debit it. Now, you remember what we said about what to debit. What you receive for the business is what you debit. It could be cash, it could be a check. On the 3rd, we are told we had purchases. Purchases of how much? 2,000. What do we do with the 2,000? You credit. Why are we crediting the 2,000? Because we are giving out money. Remember, it is a cash account. We are losing out on cash. That is why we are crediting. It's debit the receiver and credit the giver. This is the bookkeeping rule. Keep this. Debit is the receiver, credit is the giver. Debit the receiver, credit the giver. So whenever you are receiving, you debit. Whenever you are giving, you credit with the cash account. You pay out rent, meaning you are giving out cash. What do you do with the 1,500? You debit it. You credit it, sorry. Then sales. When you make a sale, it means you are receiving cash. Is that clear, Nkandu? Are you clear? Are you following me? When you make a sale, meaning a customer is giving you cash in exchange for the goods. You buy a pen, I give you the pen, and you give me the cash. So meaning I am going to debit my cash account because I am receiving money from Nkandu. Is that clear? Sundry expenses. These are expenses we've been incurring in the business of how much? 550. Now, because they are expenses, we are not receiving money, but we are paying out money for the expenses. This is what happens in the cash book because you are paying out for the expenses. It could be for the workers, the pieceworks, the things that you had to do. You call them sundry expenses. Any small expenses you incurred for buying paper, you might have bought toner for the company. Those are expenses. You record them under the credit side because you are giving out money. Now, on the 25th, we are told this business person on the 25th did what? Bought purchases. What are these purchases? It is in broad. Purchases is for goods. So when you purchase things, you are giving out cash and receiving stock. You are buying your jam, your butter, your toothpaste, your toothbrushes, polish. Those are purchases. You put them together. You are purchasing goods for your business. So, Nkandu, you go and purchase goods from Jack. Now, Jack is selling to you. You give him cash and you get the goods, meaning you as a business person can do, your account will be credited with how much? 1,500. Now, you buy a motor vehicle on the 31st. You are also giving out cash. When you give out cash of 2,000, it means you have gotten the car. What account has lost? It is your cash account losing out. Now, when you balance off, if you look at the bottom here on the 31st, we've got two 31st where it ends at motor vehicle. Now, when you end at motor vehicle, you balance off, you start adding your transactions from each column, the debit side and the credit side. Now, when you add the two sides, you find that the debit side has got a total of 12,000. And then you find that your credit side is going to have, when you add everything in your credit side, when you add you find that you are going to be less by how much? Yes, Piri, you are going to be less by 3,000. Sorry, Piri, come again. You are saying what are you saying? How much are we going to have on the credit side? So the credit side is going to have 7,550 minus the 4,450 that we have put here. This is a balance carried down. So when you add and realize that the balances are not equal, like we have here, if we remove the 4,450, we are going to have 7,550, meaning we are going to be short by how much to make 12,450, which we add on the credit side so that the account is going to balance. Now, what do you do when you have written your balance carried down? In the folio column, you record CD, which stands for balance carried down. So you are going to get the same on the credit side where it is you have put it. You take it diagonal wise down to the debit side in the next month, which is your next trading period, which is going to be your balance brought forward of how much? 4,450. This is what you start with in the next month during your trading period. Any questions from the class that I can get over the solution that we have here before we can have an exercise? Okay, yes, Abigail? Okay, you are asking why we have credited, where we have debited the capital. Capital is money you have received or you have kept for the business. If I kept money worth 9,000, it was mine, but I'm keeping it for the purpose of the business. It is no longer mine. It is money for the business. So the business is receiving how much? 9,000. Is that clear? Okay, thank you very much. I'm going to give you an exercise so that you